Who else likes Seagate?
It's got a great color scheme. When we looked at Seagate the first time, I pointed out the green color,
Yeah.
green and black.
The almost deceptive look, similar to NVIDIA type logo.
I never thought that, but you're right. Anyway, let's talk about Seagate.
Let's take a look at this annual revenue slide we pulled from our friends over at Fiscal.ai, also the sponsor of today's video. If you want to analyze businesses, get really in-depth information on industries like the hard disk drive market that Seagate and Western Digital essentially split between themselves, Fiscal.ai is the platform you need.
You can get 15% off any paid plan with this unique link here on the screen at fiscal.ai/CSI.
It's a pretty awesome deal. Okay, we are going to talk about what this annual revenue chart means. Pretty crazy year Seagate has had. I'm not sure many saw the public blog article we did back in June of 2025, but man, it has been quite the run.
It's already up. I just looked like another 17% this morning, 50% year to date. And hard disk drives have been in secular decline, not a secular growth, but things are turning around for Seagate. And let's take a look at this most recent quarter. Here's Q2 fiscal year 2026 financial highlights. Revenue at $2.83 billion. It is up 22% year over year, and their gross margin is up fairly significantly too. It's at 42.2% on their gross margin. Really nice.
Yeah, almost 7 basis points up year over year.
Very crazy.
You mentioned Seagate and the hard disk drive market is in secular decline. Tell us about that.
So here's annual revenue, trailing 12-month basis. This is from 2015. And as you can see, it's been trending down for the most part. The lowest in 2024. And now we're seeing this resurgence of spending for hard disk drives in revenue. Last 12 months, over $10 billion for Seagate.
This is probably no surprise. I can't believe it's been 7 months since we did that original deep dive on Seagate. But the question at this point, obviously, AI data centers are what's pulling Seagate up into the right again here on revenue. Is it sustainable? Let's talk about some of these numbers. So hard drive exabytes, they measure their shipments in exabytes for hard disk drives, up 26% year over year. That is driven by AI data centers. They call that their nearline revenue segment versus everything else. The 25% of the business that's not enterprise and data center was essentially flat. So big exabyte shipment per bit growth. Actually, I should say 80% data center now at this point is the revenue. Interesting point here, though, the nearline exabyte capacity shipped was up 31%, but the revenue was only up 22%. So the total exabyte shipped actually up higher than revenue. Like we discussed last June, the reason for that is the price per bit has been in decline because this is old technology. And the amount of bits shipped has not outpaced the price per bit decline. That has suddenly changed. However, there is still this concern that the price per bit is still actually slightly down, roughly 4% year over year. We still haven't found a floor, even in this particular environment where we're completely sold out. And then conveniently, not all that long ago, Seagate stopped reporting that price per bit or price per terabyte metric. But the data center, the green bars there, their nearline revenue, basically enterprise and data center up by a very impressive amount on a sequential basis.
And there were a ton of questions on pricing regarding these bits, especially on long-term agreements. And this is one of the many times that CEO Dave Mosley had to address this question. He said that they've satisfied the existing supply commitments and people are looking at new products, and we have constrained supply of those new products, which is what we're going to show you. And then we look at what the demand is and we dictate where our pricing is. So this is the law of economics, Econ 101. This is a supply and demand situation. However, there's a lot of pricing power that is not in Seagate's hands.
Yes. I would say overall, this is a fantastic situation for the hard drive industry, which is basically Seagate and Western Digital. Toshiba is a very small part of that these days. And despite that consolidation, the pricing power, the collective bargaining agreement is still very much in the hands of those end market customers. We'll get into that a little bit more later as to why that is, but no spoiler for all of you here. A lot of that has to do with the successor to hard disk drives, NAND flash and SSDs, solid state drives.
There is a lot of discussion on why hard disks are still very much needed in the data center. Being able to store massive amounts of data, especially for streaming, AI content, all of that needs to be stored somewhere. And that's why this product that they have, the Exos Mozaic 3 Plus hard disk drive, is able to store up to 36 terabytes for storage on this one. In very quick fashion, they're going to be ramping up to 4 terabytes per platter. And there's 10 platters per device. So soon that'll be 40 terabytes per device.
The platter being the disk itself, the magnetic disk that spins around. Anyways, reference the June deep dive if you want to know
About HAMR time.
HAMR time. That's all you need to know for now for this discussion. So shipments are up of these things. It looks like we're headed to the next gen of this product, Mozaic 4 terabytes per disk for a total of 40. They're sold out through fiscal 2026, which goes through about midway through calendar 2026. It looks like they're teed up to sell out 2027 as well.
It's kind of what they alluded to.
So we might be sold out of HDDs midway through calendar year 2027. Despite all of the issues with the hard disk drive industry, this still looks like a pretty good momentum play, perhaps, but let's continue.
Look at one more awesome metric that they provided, their free cash flow.
Is this a new record? The highest in 8 years. 40% sequential increase in free cash flow in this last quarter. Pretty epic.
And they expect that to continue to expand in this next quarter.
So everyone talking about the pricing increases for HBM, for DRAM, for NAND, also in play for HDDs. Basically, all of their fixed costs are covered. When you have a price raise on all of your fixed costs are covered, a large amount of that revenue goes directly to your cash flow. So fantastic situation for Seagate.
They got money coming in. And a little bit more on their outlook. This is the revenue outlook for next quarter, 2.9 billion plus or minus 100 million. So that would be 34% growth at the midpoint.
And much higher free cash flow growth is basically what that means.
And then one other metric that you might take a look at just to kind of prove the theory here, what's going on at Seagate, is their inventories. And as you can see, over the last few quarters, they're very tight. They're sold out. Not a lot of fluctuation.
So the question frequently comes up, how do we know we're nearing the end of a cycle in memory? When you see inventories start to rise in tandem with a slowdown in revenue, that could be an early signal that we might be nearing the end of a growth cycle. So obviously that's not happening yet. You have revenue accelerating and inventories holding steady. Here's the capacity. Through the first half of 2027, they're accepting orders. So for a year and a half out into the future, they're trying to book out their manufacturing capacity on HDDs with primarily the hyperscalers, the cloud providers, and they're beginning discussions for 2028 as well. It's pretty crazy for the HDD market, but on the company pages, on the web app, with the financial metrics at the bottom, you can go over to this tab and we have a little built-in reverse DCF calculator. You can run these yourselves. We wanted a nice, simple, easy to use reverse DCF calculator, or if you just want to run straight DCF calculations, you can. We obviously want to use it for reverse DCF. It pulls in the earnings per share and free cash flow per share. You can also input your own per share metric. If you think they're going to do $10 per share for fiscal year 2026, let's say, for example, and you want to project from that point forward, you can do that. I'm just going to leave this at a 50-50 blend between free cash flow and earnings per share. And we ran this for 3 years and terminal growth rate at 6%. I'm just going to drop this down, let's say down to 4%. So let's see how much free cash flow growth we need over the next 3 years. If we're just going to do this for 3 years, assuming there's a cycle downturn, looks like somewhere in the ballpark of 52% earnings per share and free cash flow, 50-50 blend growth rate for 3 years gets us to fair value today. This is very much a momentum stock play. It's a growth cycle. There are probably a lot of upward revisions that will take place throughout this year in profitability from these companies. Seagate, perhaps one of them, but especially the DRAM and NAND makers. At this point, none of these stocks are cheap. There's a lot of growth baked in already at this point. And so that's what we're trading off of right now. And we are watching the earnings growth outlook and comparing that with metrics like inventories, among other things, to make sure that we are not caught without a chair when the music stops. In other words, we do not want the rug pulled out from under us. I know none of you do either. We want to do the rug pulling, which means at some point we'll be exiting these little memory bets that we've made.
If you're following the memory market closely, you want to have some financials that Fiscal.ai has provided. They have, as you've seen in this video, not only just the financial metrics, but also KPIs like exabytes shipped. Check that subscription out, fiscal.ai/CSI. And if you're interested in the memory market, check out this video we did a couple weeks ago on the memory shortage.